Hi, and welcome to another episode of Inside CalSTRS Investments, a look at how CalSTRS invests for the benefit of all California educators. I'm here today with Chris Ailman, our Chief Investment Officer. Hi, Chris.
Great to see you, Mike. Thanks for hosting this again.
My pleasure. Well, today we're going to talk about something that happens at CalSTRS every 4 years, but it's not the Olympics.
No, but it's almost an Olympic effort, and that sounds big, but it does involve almost everybody in the building. It involves the investment committee, the retirement committee, and it really is, it's an asset liability management study.
Wow, that's a mouthful.
It is, ALM, but it really is the single most important decision the investment committee makes. And I know that sounds grandiose, but it really is true. Almost 90% of the return of the portfolio can be explained by our asset mix, how much stocks, how much bonds, and that's true for even retail investors. So we've said to the investment committee over and over again, it's only once every 4 years, but this is the most important decision they can make.
Well, since it's a year-long effort, what are some of the key benchmarks along the way?
Well, what people will see is in the springtime, they're going to really hear mostly from the actuaries at the retirement board, and they're going to be talking about our liabilities, how long teachers live, what kind of salary they have when they start, and what we expect during their career, because we want to model out the liabilities for the next 30 years and really study that. So as you know, once a California teacher retires, they live longer than just about anybody. So studying longevity and demographics is critical to understanding your liability side.
And then how does this study actually affect the portfolio?
Well, during the spring, we're still going to be studying in the investment committee the capital markets. So we're going to be looking at all the global financial markets. But then come in the summertime, we're going to be showing the board a whole series of investment portfolios, different mixes within the portfolio, so that they can pick what they think is the right return or the right risk to match the right return against those liabilities.
So the last time the board did this, they came up with something called the Risk Mitigating Strategies Asset Class. Can you explain that?
Yeah, that was really an effort to look at the portfolio and realize, okay, after '08 and really after 2001 too, those two big bear markets, what's the best way to balance the portfolio? We need to generate a return, because for every dollar that we pay a retiree, 60 cents of that has to come from the investment portfolio. So you have to generate a return with those contributions and take risk, but you want to balance it. So we created this risk mitigating strategies that really counteracts and tries to balance out the investment return we're trying to get out of stocks and bonds. I always like to think of it as it's our insurance protection in times of a recession. And so that'll be part of the study, is just for any individual. How much stocks, how much bonds, how do they design that total portfolio?
Well, make sure you eat your Wheaties.
Yep, it will be a heck of a study. I don't think we'll make a Wheaties box at the end, but by around November to the end of next year, that's when the board will really be adopting that new plan, and it'll be another 5-year plan that we'll develop, and we'll go back at this again in about 4 years.
Okay, thanks, Chris.
You bet.
You've been watching Inside CalSTRS Investments. Thanks for joining us.